Hey guys, this is Rudy for Bester Investor. I'm live in my warehouse facility in Mangonia Park, just outside of West Palm Beach in Florida. And now that I've had my been able to get my grubby little paws onto the actual transcript from the Q2 conference call, earnings call with Occidental, I realized there's way too much good stuff that I missed that I need to share with you. So I thought I'll do a quick update and maybe catch up on some of the things that I missed and fill in some of the blanks. So this is the actual transcript of the earnings call according to Motley Fool. So as best they can, they transcribe it and they give us the full details on the text. So let me just kind of walk you through this. It says it's 23 pages long, but I've already gone through it and I've highlighted a few sections of it. So it shouldn't take too long, but there's too much good stuff on here for me not to share it with you. So Vicky says, our capital discipline and efficiency combined with the support of an improving commodity price environment positions us to generate the highest level of free cash flow before and after working capital since the third quarter of 2008, when WTI hit $145 a barrel. We exited this quarter with approximately $4.6 billion in unrestricted cash, which does not include cash received in July from the recently closed divestiture or the cash used from the debt tender, which closed in July. Our oil and gas business delivered sound second quarter production from continuing operations of over 1.2 million barrels of oil equivalent per day, with total company-wide capital spending of almost $698 million. Our domestic oil and gas operating cost of $6 per barrel of oil equivalent came in substantially lower than our full year guidance. Some more highlights here. We increased our full year production guidance for the continuing operations to 1.15 million barrels of oil equivalent per day. In the Midland Basin, we set a new record for drilling, with over 9,500 feet drilled in 24 hours, contributing to a new Petroleum spud to rig release record, drilling a 10,000-foot horizontal well in only 8 days. Some more things that they can pat themselves on the back for over here. Obviously, this transcript is available online, so you can read it. I'm just trying to save you some time by doing it on your behalf. Our divestiture plan advanced in the second quarter with the recent closing of the non-core Permian acreage sale for about $510 million. We expect to close at least $2 billion of divestitures post-Colombia. Going a little further, deeper into the weeds here, Rob says we placed a greater importance on cash flow generation, especially as we are focused on deleveraging, and we are pleased to be generating income on an adjusted basis. We delivered outstanding production results year to date while having deployed less than half of our full year capital budget for $2.9 billion, which is important because we have already now reported a half a year. To obtain the costless structure, we sold a 2021 coal position of 355,000 barrels a day with an average strike price of $74.16 Brent. We did have some communication about that on previous videos. I'm not going to go into detail on that one. When I spoke to the investor relations group, they shared some information with me related to that. They said if Brent tops $74, we'll be in a good position. We expect that 2021 will be a record year for OxyChem, even surpassing our earnings of 2018, which was a record year. We also lowered our DD&A guidance for 2021, reflecting the mid-year reserves update. Our production in the second half of 2021 is expected to average 1.14 million barrels of oil equivalent per day. With the successful completion of our debt tender, we paid over $3 billion of 2022 to 2026 maturities, and we have a clear runway over the next few years. Options available to us for debt reduction include potentially calling the 2022 floating rate notes prior to their maturity, executing additional tenders, exercising attractive make-whole provisions, pursuing all the market debt repurchases, or we may choose in some cases to build a cash position, which may be applied towards retiring maturities as they come due. We're in the Q&A section now. I'm going quite fast, obviously, as you can tell. Rob says, our vinyl business and caustic soda businesses are two businesses that are major profit drivers. That's with OxyChem. The earnings impact that you are seeing is significant. That's a huge contributor to the quarter. Neil from Goldman Sachs said, can you remind us what your absolute debt target is? I'm not going to go into too much detail on this one because we've already covered it. They are trying to get the long-term debt down to about 25 billion. Once we reach that more sustainable debt level, we will start resuming a greater amount of cash to shareholders. It's according to Rob. A little further into the call, skipping, obviously, as you can tell, Roger from Wells Fargo talked about the metrics they're using to underpin the decision to move away from any sort of hedging strategy and maybe getting back to thinking about from a debt to EBITDA, debt to cap, maybe a long-term debt number that you're more comfortable with. They keep sort of pushing the same question. Effectively, we know the answer. They're trying to deleverage and they're trying to get to a level of around 25 billion, if possible, but we'll see how we go. Obviously, it also depends on the commodity price. Rob replied, he said historically the company has not been one with a hedging philosophy, and certainly the $1 billion we were able to create in value last year from the hedge was something that was critical to our success. But as we evaluate hedges, we consider a lot of factors. Number one is the cost to execute the hedge. Certainly, as a cost, the cost of hedges that we did last year came with a call provision this year, which hasn't been very expensive, but they can be, and implications that the hedge is going to have on the upside to leverage our oil price, such as a collar. So a pure put hedge is pretty expensive. So you don't need to hedge if you don't have to in an environment where the market prices are going up. The work we've done, particularly between deleveraging and the clean out runway, has made us give us a lot more selectivity around the hedging strategies moving forward. Is not to say we would never do them again, but it's certainly getting all our preferences to create the value for shareholders and give them enough exposure to oil price, which is something that Oxy has to offer right now and many others do not. Jeff added, Jeff is the VP of Investor Relations. We went from 12 rigs down to 10. Today we are at 11. So we're just kind of flattening out what that activity profile is while we're keeping the capital budget exactly the same. Phil from JP Morgan said, any thoughts around the 2022 CapEx? And Jeff said it's probably too soon. We'll do that in the fourth quarter call. Also about our chemicals business, we forecast is about 300 million. They've spent a little over 100 million, so a lot of these activities are back-end weighted for OxyChem. On the Permian side, you can see of our 1.2 billion, we've only spent 500 million. And the reason for that is that a lot of our Midland Basin wells are front-end loaded, so much lower working interest. With the carry, you'll find over the course of 1 year, it's going to get close to around 2.9 billion CapEx, regardless of how you slice or dice it on a quarterly basis. Phil from JP Morgan asked some questions about the EOR business, and Vicky replied and said, we have 2 billion barrels of resources yet to be developed in the enhanced oil recovery business in the Perm and the conventional reservoirs. The low carbon business will provide us with either a very low cost or net zero cost CO2 for those projects. A little further down, Phil from Scotiabank said, if you look at the opportunities that you talk about some of your peers, did you talk, or if you talk to some of your peers like Shell, maybe you can pull the Perm assets together into a joint venture, a JV. Vicky said, what you said is a great idea. We have a JV with EcoPetrol in the Midland Basin. We may also look at additional joint ventures in the Delaware Basin. This kind of relates to that disposition or divestiture that Shell wants to do of a Permian asset that is worth about $10 billion. I don't think right now is a good time for Occidental to necessarily make an acquisition and scoop that asset, but they could certainly do a JV with a partner in that regard. So coming back to that, so Paul said, have you talked with any of your peers? And Vicky said, as an industry, we want to create value and we want to do business differently to what we have done in the past. Jeff added, our Perm position was built on one of those JVs. Basically, we bought the joint venture between what was then Amoco, Shell, and BP and Arco. Neil from Truist asked a question about OxyChem and the decarbonization business and coordination. Vicky said OxyChem is already involved in the design of direct air capture facility. That's as of today. I'm not going to dwell on that one. Leo from KeyBank also talked about direct air capture. Vicky said currently there are a couple of different technologies that can capture CO2 from the air. Of these technologies, the largest one that is built today captures about 4,000 tons per year. The facility that we intend to build in the Perm can capture about 1 million tons per year. So it's on that basis that we are talking, taking that pilot and upscaling it. Leo from KeyBank added, timeline to get the first project in place. Vicky said the FEED study should be done and we should have our final investment decisions in the early part of next year, and we hope to begin construction by the end of 2022 or early 2023. It should be up and running by 2024. And of course, we probably already all know that United Airlines has announced that they will be part of the direct air capture facility. That was pretty much the entirety of that conference call, and includes some of the highlights reel that I missed yesterday when I made the video that many of you have probably watched by now. If you are watching this one and you missed the previous one, you could probably skip that one. But if you watched the previous one, I glossed over some important facts which I shared with you in this one as a result of having the transcript available as opposed to my scribbled notes, which actually overlapped some Q1 and Q2 notes that I made for myself. So guys, it's a good news story for Occidental in terms of where we are right now. So on that happy, positive note, have yourself a great day. Thanks for watching, and I'll talk to you guys again soon. Bye-bye.